Hi! In the two previous videos, we held a discussion on the advantages and disadvantages of being a public company as opposed to being a private one. From that discussion it was evident that there are many considerations to take into account. There are short as well as long-term issues, and the decision as regards whether to transition from privately owned equity to public equity is not that simple to make. While going public can have many positive effects, these effects must be balanced against the disadvantages. In this video, I want to make you aware of the fact that there have been companies that went public and later on decided to revert back to being private, as they deem that being private can better allow them to grow their business. One such company is Dell, the computer maker. Dell went public in 1988. That is, it held its initial public offering that allowed it to transition from being a private company to a publicly listed one in 1988. Dell went back private in 2013. You can no longer find its stock trading in public markets. It is no longer listed on public stock exchanges. Since then, Michael Dell, who is the founder and also serves as the chief executive officer at Dell, has given numerous interviews, during which he was asked on the decision to revert back to being a private company. In tackling that question, he was primarily saying that going back private has been a great relief, as he no longer needs to deal with impatient shareholders. And the implication was that shareholders mostly cared about how the stock price would perform in the short term, instead of paying attention to the long-term prospects of the firm. In addition to that, he was mentioning that the fact that reporting requirements and the associated costs are far less for a private company gives Dell far greater flexibility and the ability to focus on the long-term future of the company. In one of those interviews on Bloomberg TV, Michael Dell specifically said, "We are not bound by 90-day periods. We are focusing on our future out several years from now." And these 90-day periods he mentioned refers to a quarter of a year and directly takes us to the discussion on quarterly capitalism we had in the previous video. Making these connections between videos will allow you to better grasp the material, but also in this case, it might get you intrigued and give you the drive that perhaps you previously lacked and start following financial developments to draw your own conclusions. On a different note, in case you are wondering how can a company go back to being private after it held its IPO and is thus operating as a public company, that question is not that easy to answer, and unless being directly involved in such a process, I don't think one can thoroughly comprehend what it does entail. To try to give you an idea though, it involves purchasing all company shares that are trading in public markets and retiring them, as the company's stock will no longer be listed for trading on the exchange. Let's move on.